Most business owners in Denmark are aware that they have to pay tax on their income. But what kind of tax and on what exactly, and how does it all work? In today's episode, we are going to shed some light on this. Stay with us.
Welcome to the Business Lessons in Denmark podcast. Our podcast gives the answers to your business related questions that have not been answered yet or things that haven't even crossed your mind. My name is Adina Bohos and I am here with my colleague Katalin Balog. We are owners of Kuulekon CPS, a Danish accounting office. Hi Kati, how was the holiday season?
Thank you, very pleasant. It was good to slow down a little bit after the fast-paced weekdays and finally spend some time comfortably in an unhurried way with the family. And how were the holidays for you?
Oh, thank you. These few days went quickly. They were busy, but really nice. So, well, in any case, it's time to move on to the subject of the Danish tax system and introduce the second very important type of Danish tax, namely the personal income tax. What is this called in Danish?
If you mean the type of tax that we as individuals pay on our income, then it is called persoonskat, which means personal tax. But this is actually a collective name. It includes several types of taxes: income tax, real estate tax, dividend tax, capital income tax, and so on.
Oh, it's good to know that it consists of several types of taxes. So, if I am employed somewhere where I receive a salary, but I also own a small house or an apartment, then I should actually pay two types of taxes, one on my salary and another on my property.
Yes, your personal tax would be made up of income tax and real estate tax or property tax. But if you also had, let's say, shares, then you would also pay dividend tax.
Okay, I understand. My next question would be that how much is the tax rate? But I guess the answer to this is not so simple because if the tax that I have to pay consists of so many different types of taxes, then I suppose that they all have different rates.
Yeah, that's right. The tax rate is different for income tax. It's also different for property tax or real estate tax, and different again with dividend tax and so on. We will discuss this in detail later. For the time being, let's just say that as an individual, all in all, the tax burden usually comes out to around 30-40%, depending on individual circumstances. High income earners pay higher taxes, but even here, there is a ceiling that a person's taxes cannot go over, and it is currently 52.07%.
Okay, this gives a rough idea then.
Yeah. Um, Let me also say that Denmark has a bit of a bad reputation for having high taxes. Many people complain that, oh, taxes are this high in Denmark and taxes are that high and so on. Taxes are certainly not low. But you should know that one of the reasons why taxes are high in Denmark is that here the tax includes also the social security contributions, that is health insurance contributions and pension contributions, which in other countries must be paid in addition to the tax.
Well, that's interesting. So it's not necessarily possible to compare Danish taxes one to one with the taxes of other countries because the system itself is different.
Yeah, as they say, you cannot compare apples with pears.
Yeah. Well, how much and why so much? We will discuss this in more detail later. But then let's go back to the original topic. What about the business owners? What type of tax do I pay on my profit?
Actually, it depends on what kind of business you have. If you have an APS or an ES, which are incorporated companies, then you pay corporate tax. But we will not go into that now because we are not talking about the taxes payable as an individual. Corporate tax will be the subject of a later episode. If, on the other hand, you have a business that assumes personal contribution, like a PMV or a sole proprietorship or an ES, then you pay income tax on the profit of your business.
Yes. So in that case, it's not my company that is taxed on its profits, but me as a private person should pay tax after my company's profit.
Yes, exactly. If you have a sole proprietorship, then you pay the same type of tax on your profit as those who are employees and pay the tax on their salary. If you have a PMV or an ES, it's the same.
I see. Can it be said then that my business profit is roughly the same as the gross salary of the employees? And
Yeah,
employee pay income tax from his salary, and I, as a business owner, also pay income tax from my profit.
yeah, that's exactly right.
Okay, and what does this profit actually mean? Can we look at this in a little bit more detail?
Yeah, sure. When you have a business, money flows in to you, right? We already know from the previous podcast episode that if you are registered for MOMS, which is VAT, right, in English, then a part of this incoming money is not even yours because it's the MOMS. It belongs to the state. For the sake of variety, let's assume that you have a little cleaning company. You clean offices, and after your work in December, you receive 50,000 Danish crowns, and then 10,000 crowns of this amount is MOMS, which you just put aside nicely, as we discussed last time.
Yes, mom.
That's right. So the point is that 40,000 crowns is your income, ultimately.
Yes, and then I need to pay tax after these 40,000 crowns.
No, no, no. This is only your income. This is not your profit. It's great that you have received all this money, but you also had some expenses. You had to buy new mops, your vacuum cleaner broke down and you had to buy a new one. You also have to pay for your phone subscription, you have to pay the accountant, bank costs, and so on. In total, let's say you spent 5,000 crowns on all these things.
Yes, yes. My income is 40,000 krona. I deduct the 5,000 krona cost. The rest is 35,000 kron. So at the end, I have this amount, and that will then be my profit on which I have to pay tax.
Yes, exactly. So this is your profit. This is the amount that you actually earned, and this is what you have to pay tax on.
Okay. However, you said that if I have an APS or an AS, then it's a different story because these companies pay corporate tax on their profits. So I, as a private person, don't pay tax on the profit, but the company itself pays corporate tax. As the owner, I don't even pay tax as an individual.
Yes, you do. Most of the owners are also employees in their APS, and then they receive salary from the APS. So even in this case, you will pay income tax as a private person on your salary. Um, Therefore, with an APS, the taxation is actually divided into two parts. The company itself pays corporate tax, and you pay personal tax on your salary from your APS, just like any other employees from that APS or from anywhere else.
Okay, and what if I'm not employed by APS and therefore I don't get a salary? I bought that cute little guest house just as an investment, but I have no intention of standing at the reception all day, neither peeling potatoes as a kitchen maid, not cleaning rooms, and I don't even want to sit in the director's chair. So I'm the owner, but I leave the work itself to someone else.
Okay. Well, even in this case, you might pay tax as an individual, because if the guest house is profitable, then you will probably take out dividends every year, after which you have to pay dividend tax. Or if one day you decide to sell this APS that owns the guest house and buy a summer house on the Canary Islands from all those millions that you receive from the transaction, so you can spend your winters over there, then you will still have to pay personal taxes on the amount that you won on this transaction. Also, you will have to also pay tax on the summer house, this property tax or real estate tax.
Oh, so I just can't avoid paying taxes then.
No, but you should be glad to have something to pay taxes from, right?
Yeah.
I always say that I certainly pay a lot of tax, but I wish I had to pay 10 times more, because then it would mean that I earn also 10 times more.
Yeah, just be careful with your wishes. The court wish will fulfill them in the end.
No, yeah. Okay.
Okay, so let's briefly summarize the main point. It doesn't matter if I'm an employee or a business owner, I definitely have to pay personal tax. If I am a business owner, I either have a business that requires personal contribution like PMV, sole proprietorship, or ES, in which case I have to pay tax on my profit, or I have an APS or AS, when I will probably also have to pay personal tax here only on my salary or the dividends or both.
Yeah, that's right. And then there is this fact that your tax as an individual, what you pay, is made up of several types of tax. It can be income tax and dividend tax, as you just mentioned. But if you have a property, then you pay tax on that too. If you receive interest, then you pay another type of tax, and so on. With some people, it's not so complex because they only have an employment relationship and they only get salaries, so they only pay income tax. But for some people, it gets quite some complex, because maybe they have a salary, but maybe they also have a small company, and they have to pay tax on the profit of the company. And then they might even have a house on which they have to pay the property or real estate tax. They can have shares on which they pay dividend tax, and so on. So then it gets a bit more complex, and ultimately, what they pay tax as an individual, it is together from all these different kind of taxes.
Okay, it's completely clear. Thank you, Kati, for all the information today. What are we going to talk about next week?
Next week we will still stay with the taxes and go even deeper into this topic.
Great, I'm looking forward to it. See you next Monday at the usual time.
Yes.
Today's episode was sponsored by Cool Accounts APS. Cool Accounts APS can help with starting your company with bookkeeping and tax matters. In addition, we also provide business and financial consulting. If you liked the show, then follow us and like our Facebook page. If you would like to contact us, you can do so via our website www.accounts.cool. We wish you a successful week.